I think people are severely underestimating the impact of the Web2 big companies coming into the space and changing it fundamentally. I think people don't understand the distribution power a company like Stripe has and the connection to small, medium businesses and how likely they are to win in the categories they will compete in compared to any other incumbent in the existing Web3 ecosystem. And so I think that is severely underestimated and people should be watching them very carefully and really considering, do I want to compete with these big players that already have massive inbuilt distribution? Do I want to go to other areas where we're not going to have a competitive set?
Welcome to High Stakes, the podcast where Web3 meets the real world. I'm your host, Alex Nwaka, co-founder and CEO at Validation Cloud, and former principal at Touchdown Ventures, where I led enterprise SaaS investments. Each week, we sit down with the founders, investors, and institutional leaders pushing the boundaries of blockchain, AI, and infrastructure. If you're navigating regulation, building at scale, or trying to separate noise from signal in emerging tech, you're in the right place. Let's get into it. Welcome back to another episode of High Stakes. Today, I am joined by Paul Thomas, who is the CEO of Somnia. Welcome to the pod, Paul.
Glad to be here. It's going to be fun today.
Absolutely. So, Paul, maybe for folks in the audience that aren't familiar with you and your background, we always like to give, those folks a bit of a quick snippet on where you come from and what, brings the context and perspective you bring to the space.
I'm a computer scientist by trade, studied computer science at university. Out of uni, I spent 3 years at Goldman. So I worked in traditional finance. That was mainly in risk tech. So did kind of like back office stuff, making sure traders were appropriately marking their books and then making sure the firm was managing risk appropriately. I did that for a few years, but in my heart, I always wanted to work in the games industry. It's kind of what I loved. I grew up playing video games. I love video games. And so I then, about 13 years ago, joined a very early stage startup called Improbable. So I joined there when there was 4 of us. By the time I left, we'd scaled up to about 1,200 people, raised about $700 million in venture funding at a multi-billion-dollar valuation, and had a good ARR, basically. So by the end of it, we obviously pivoted a bunch of times. We were primarily focused on selling technology and services to the games industry, and then the sports and music industry as well, which at the time we called the Metaverse industry. We don't use the word Metaverse anymore. So my journey there, as you can imagine, was very varied, going from like 4 to 1,200. I did pretty much all of the jobs, ranging from engineering the core technology, being the first support engineer when we sold it to our first initial customers, being the first sales engineer, going around while selling it. So I was selling it to all the way from like the big AAA game studios, all the way down to like the little guys. Then just became a sales guy in general, obviously a technical slant. Did product management for a period of time, so kind of helped inform how we were building the product, the business model, all that kind of stuff. Then went back to the commercial division, did product marketing, so basically formed the go-to-market for the product suites we had, informed how we did that with our sales org and our marketing org, and then eventually became kind of second in command to the commercial division. So very varied in terms of what I did there. I was the guy basically who got given stuff where it's like, we need someone who can do it, basically. So Web3 rise, I got into the space back in 16, 17. So when Ethereum first kind of like started to come up more, I never got Bitcoin. It took me a very long time to understand Bitcoin. I now own a lot of it, but I never got it. I don't really understand verbal goods. I didn't understand it as a form of currency because it was really slow to transact. I was like, I don't get Bitcoin at all. And now I get it as like a digital store of value, but that took me a while to understand. Ethereum, though, I got very quickly. This idea of this kind of globally distributed world computer with a ledger associated with it, I was like, this is really cool. Because obviously I had a financial background and I saw all the problems in the finance world and I was like, this could actually transform the financial industry. Then I started to go a bit further and realize actually it could change all of digital assets, basically. And I was imagining a world where everything that was digital in the future would be on the blockchain in some form or fashion with the compute associated with it. And I was like, okay, this is awesome. So internally, I pitched to get a few of our games onto the blockchain. They all thought I was mad. They literally looked at me like, what was this crazy guy talking about? Eventually, I convinced them to give me like a proof of concept team. And I got a couple of the smaller games and we did some proof of concepts. So this, by the way, NFTs weren't even a standard yet. So this is very early. Those experiments did not work, TLDR. Basically, Ethereum was way too early back then. And we were trying to do digital assets at scale. So you had like these games would have tens of thousands of consumers and trying to do a lot of microtransactions, digital transactions. Just Ethereum wasn't really built for that at the end of the day. So I was like, Nice ideas, but then a corner for now. So then fast forward to 2020, and now the company has started to do these kind of metaverse events. So we did digital activations in the sports and music industry with people like Major League Baseball. We did digital baseball events, Universal Music. We did digital K-pop events. And so now, again, these were all at the end of the day going to monetize with digital assets. So people wearing items, people using items and experiences. And I was like, okay, let's try the blockchain thing again, because I was like, you have this kind of ecosystem of different experiences, all owned by different counterparties, and you need some kind of central ledger that they can all trust and kind of be part of. And I was like, blockchain is a good solution here. So again, start looking at all of the chains in the market at that point in time. Technology has come forward a lot at this point, but the problem we had was still performance. These events, you would get tens of thousands of consumers show up, all trying to interact on chain at the same time, just wasn't really working out. And so you still had a scalability problem, particularly in the EVM ecosystem, which I was very wedded to because it had all the developers basically were there. And I was like, we have to be on the EVM. I've made mistakes in my career in the past where I've tried to take technologies with new programming languages to market. It was a nightmare. I failed, spent tens of millions of dollars, did not work out. So I was like, we must be on top of the EVM as well. And nothing was fast enough, basically. So that's when we started looking at Somnia, then spun that out, and have now taken that to market. So that's my journey. I'm an engineer at heart, but I don't really get to code very much anymore, unfortunately.
You moved away. It's been pulled out of your hands to some extent.
It's sad. I do in my spare time. AI has made me an engineer again.
Well, I think the other component here is maybe a hearty congratulations on, the recent mainnet launch. I know a lot of work went into that, I'm sure, as it does at most projects. Can you walk the audience through what the milestone of mainnet means to you, the team, and the ecosystem overall that you've built?
Cool. That's an interesting question. I think obviously for the team, we've been building the technology and taking it to market for the past 3 years. So Somnia as a brand became a brand about a year and a half ago. The core research on the technology started about 3 years ago. So for us, this was the culmination of all of that work, with it being a live platform that now people can deploy applications to and crucially monetize. I think that's the big difference for me between testnet and mainnet. There are real stakes involved in a mainnet. Whilst a testnet, you can get a lot of users, get a lot of like fake transactions and people, but it's not real until there's money on the line, in my view. And that's why personally I was very driven to get to mainnet as quickly as we could, because it's where I think the rubber hits the road for a project and it becomes a real thing, rather than you can kind of do lots of smoke and mirrors before that. Some of the team were telling me, we're not ready for a mainnet, we need more time. I was like, technically we are ready, and I would rather be out there in the market, building with our ecosystem, building with our partners in an environment that has stakes, that gives us reality, rather than this kind of testnet phase. You obviously have to soak in testnet to make sure it's ready and stable and secure, but we were at that phase. So for us, it's the culmination, and basically allows now the ecosystem to financialize itself and become what I call real. So you actually see real traction from the different apps in the ecosystem, see people actually making real revenue, trading, all that kind of stuff. So for me, it's actually making the project real. There's also another thing. So we are, Somnia, just for context for people, is a high performance EVM compatible L1 blockchain. It had this purported performance of 1 million transactions per second, which everyone was like, well, can you really do that? And now we have a mainnet that showed that capability. And so, yes, we can do that now. And it's proven on a mainnet as well. So there's also a kind of point of proving ourselves of it being real technology, because I think a lot of people in the space were skeptical. So for us, it was a very big moment, very hard moment, but very big moment.
Do you look back at any of the journey from testnet into mainnet and can point to maybe one or two either breakthroughs or setbacks that really informed, the development of Somnia and getting to mainnet, and you look back at it now and you're like, those were really good things for us as an organization or as a technology?
God, there's many things. So I think let's start right at the beginning. So when we started Somnia, we had the very strong positioning around the metaverse. This is because of the lineage from Improbable, where I used to work. And essentially, Improbable, they have a bunch of the technologies and experiences that are built on top of Somnia. They were very focused around this theme of gaming, sports, music, so metaverse, basically. So we started going to market with that positioning. I quickly learned that was incorrect. The metaverse as a concept in the Web3 space was not very hot and not very well received. I constantly go to VCs and potential ecosystem partners and be like, why are you doing Metaverse? Metaverse is dead. And I was like, okay, Metaverse as a concept can't really die. This concept of like digital experiences, consumers going between them, that's never going to die. But I quickly pivoted the positioning to focus on a broader set of concepts around fully on-chain experiences rather than Metaverse. Because I think that was a dangerous piece of positioning. So that's from a kind of go-to-market and positioning side. I think from a technology side, the biggest shakeup, and this is very unexpected. Web3 has this incredible ability to attract a lot of users very, very quickly. So I built a lot of apps in my time. And normally when you release a new application or platform, it's quite quiet in the beginning and then slowly builds up. And then you kind of get to an inflection point and it goes crazy. This literally went from zero to like crazy very, very quickly. I remember the first kind of DevNet open thing we did where we did an open NFT mint. There was about 1.6 million people that showed up and tried to mint NFTs straight away. And I was like, what is going on? And it's because of crypto incentives are so powerful at the end of the day. And so that I think was a great learning for us in terms of these crypto incentives are incredibly powerful. You can attract a lot of consumers very, very quickly. But you need to be ready for that. And you need to make sure things are more hardened and ready to scale up very, very quickly than necessarily if you're looking at a more traditional Web2 go-to-market. So we really battle hardened the technology very quickly. I think we made a decision to be very open very quickly as well. So during our DevNet, we actually allowed people to touch it and consumers to touch it and use it and mint NFTs, trade, play games on top of it. People don't normally do that. Normally it's all private and all closed down, but we made it public early because, again, I think the best products are built in the real world with the community at the end of the day. So yeah, I think for me, that was the biggest technical challenge we had in terms of scaling up very, very quickly from like zero to a lot quickly. That I would tell most founders, be cognizant of that in Web3. If you put good incentive mechanisms and have a decent marketing funnel, you'll get a lot of users very quickly.
So you often describe Somnia as infrastructure for a unified virtual society. So I'm curious now that you're live on Mainnet, how you view users, developers experiencing sort of that vision relative to what you talked about before with, how the metaverse is thought about, I think in the zeitgeist and more broadly. How do you think about that?
Yeah, so the positioning I use now in terms of the vision is a decentralized version of Roblox, which is more palatable to people. Roblox is a metaverse at the end of the day, but Roblox is very successful and people see that as like super successful, loads of users, loads of revenue, that thing works. So I now say what we're doing essentially is taking the properties of Roblox and turning it into a decentralized ecosystem of apps. That is more palatable to people. People are like, okay, that makes sense. So the way I kind of see Somnia and the way it is today, basically. So Somnia, high performance blockchain. You need that high performance when you're going for these consumer style applications like games and entertainment experiences because they bring a lot of users very, very quickly. Traditionally, blockchains haven't had to deal with this because it's been slower moving finance. If you click a button to buy and it takes you 30 seconds to resolve that, it's not the end of the world as long as you get the price you wanted to pay for. But a consumer clicking buy and waiting 30 seconds to get a digital wearable, they're probably going to leave the app or get bored, basically. So you can't have those kind of things. So for us, what we're building out at the moment is a set of entertainment experiences. So those are video games, those are sporting experiences, music experiences. They're all underpinned by a DeFi layer. So ultimately, there are still DEXs, there's still NFT marketplaces, and those experiences actually build on top of those DeFi primitives because people are transacting and buying things at the end of the day. So for us at Somnia, we're kind of continuing to build out those experiences. And crucially, they're all interoperable. So a consumer can move between these experiences and take the items or the things they bought in one place and use them in another. Now, I should be very careful here because with gaming, interoperability is actually slightly dangerous. Like you can't take like a gun from one game and bring it into like a wizard game. It wouldn't make any sense anymore. So what we do is more cosmetic interoperability when I talk about interoperability. And that's kind of this idea of like you as a consumer buy your stuff, you can then use it across all these digital experiences, be those video games, be those entertainment experiences. The way this is evolving and changing is what we're doing now is starting to broaden out the tool set that enables more users and particularly consumers to build out these experiences. So leveraging AI in particular to allow people to more easily build out these entertainment experiences. So the first example of this we have is as a user, you can type in a prompt you can be like, generate me Tetris, for instance, and it'll generate you Tetris. So it's very good for 2D mini games at the moment. You can then publish that to the blockchain, monetize that through tokens, through NFTs or wager mechanisms, whatever you kind of see fit. And it makes you as an individual become a content creator, basically, for these kind of digital experiences. And then we're kind of investing in that more, where we're getting to 3D, you'll be able to build out 3D experiences. And so really what Somnia is becoming is this kind of mix of highly professional experiences built by big brands or gaming studios, and then a lot of UGC content generated by consumers, powered a lot by AI at the end of the day. And that's the kind of vision behind what we're doing at the moment. So that's where we're pushing towards. I think the other thing that's quite interesting on Somnia that we didn't expect and isn't really in the positioning of this kind of unified virtual society, but is happening more and more, are prediction markets. So because of Somnia's super high performance, what we're seeing is a lot of people building kind of real-time prediction markets. They're basically taking a lot of real-world data sources, putting those on chain because you have a lot of throughput with Somnia, and then allowing you to financialize that data or bet or gamble on that data, basically. So one example of this, we have one team, they're taking all of the world's flight data, they're putting that on chain, and then allowing you to place a wager saying, I think this plane is going to be late or not. So that's something that is a new thing that isn't really in that virtual society motif, but is something that we're seeing a lot more of. Yeah, so that's basically where we're going, what we're doing. This prediction market stuff is very interesting for us. We never planned it, but ultimately the blockchain is an open ecosystem, right? Anyone can build whatever they want. And so we will look at these other use cases, and if there's something interesting, we will choose to like go that direction as well.
Well, and I think even more interesting when you look at the, strategic investment that was announced this week in Polymarket by ICE, which is, not a typical organization for investing in this space or more broadly for that matter. So prediction markets definitely something that's very topical, both in the traditional finance space and sort of in our space as well.
Yeah. I think that ICE investment, I see it as, I think Polymarket are going to end up becoming like a truth source that lots of institutional shops kind of plug into, basically. And so they'll have like an institutional data source. And that's why I think that partnership and that investment made sense. I actually see these markets turning into a form of insurance. So if you take that plane example, for example, that's a way to insure against your plane being late. And I actually think a very interesting application for prediction markets is insurance, but fully on chain, basically, that auto resolves. That's, I think, where we're digging, but I'm not sure. It's a very interesting space. I think that is basically a new financial primitive at the end of the day. And whenever these occur, there tends to be a lot of different use cases that come up, a lot of different opportunities. So I think it's a very exciting and interesting space, in my view.
Very much a Cambrian explosion for sure. So at Validation Cloud, we've obviously supported Somnia as part of the journey, particularly on the performance and scalability side from an infrastructure standpoint. I'm curious for your perspective on how important infrastructure partners have been as part of Somnia's success and journey, and how you think about those folks insofar as I think there's system design, and we talked about performance and sort of the throughput. I think as you somebody from a technical standpoint, there's always the system design, and then there's what happens when the rubber meets the road. And so I'm just curious, in sort of with that as a backdrop, how do you think about infrastructure partners as part of like that sort of concoction of partners to bring Somnia to life?
Yeah, I think ultimately the infrastructure partners are the core of Somnia, in my view, at the end of the day. Without them, Somnia wouldn't exist. So Somnia is a blockchain. It is what we call sufficiently decentralized. So we're not trying to be as decentralized as like an Ethereum, where there's tens of thousands, where you can run basically an Ethereum node on like a toaster. It is a high performance chain, so requires a high performance node, but it's not crazy. It's still consumer grade hardware. So it's like Solana or Sui kind of node is the way we kind of think about it. So for us, without the infrastructure partners to run that, it couldn't be a decentralized network and a blockchain at the end of the day. So they are the core of what we do. You guys in particular have done an incredible job at providing very high quality infrastructure in different places and geographies, which is also very important to us as well, because having that geodiversity increases the decentralization of the chain, which is good for its value proposition at the end of the day. So that's like the core thing that all of these infrastructure partners play. And we've selected so far what I would say like institutional grade infrastructure partners like yourself and lots of other people. They are very, very high quality. We do have a vision to kind of make that what we call semi-permissionless and eventually permissionless, so more people can bring in compute to the network. But there will always be strict performance requirements because ultimately Somnia is a high-performance chain. That is its proposition. We can't sacrifice that performance at the end of the day. So that's the kind of core bit. I think the other bit that I've been really pleasantly surprised by the infrastructure partners is the other bits they add to the ecosystem. So for example, some people have developed software which now is used where you can view the network, you can see all the nodes, you can stake tokens, which is really cool. Some people have done pull requests onto the core chain itself to look through the code, suggested suggestions and improvements, which is really cool. Some people like this, for instance, are helpful on the go-to-market side. So they will publish articles, they'll work with us at events and conferences, they'll do podcasts together. So I think what I've also come to realize is your infrastructure partners are helpful in terms of your technology development and your go-to-market development as well. So they're not just people that run nodes. If you work with good partners, they'll help you do much more than that, which is awesome. And obviously reliability and scalability of the whole system at the end of the day. So yeah, very, very important in my view.
You talked about this, the Metaverse theme in the Web3 space has had somewhat of a history. There have been several launched over the years. Very few, if any, have really broken out and emerged. Do you see that as an infrastructure problem that has now been solved to some extent, or do you view this as you and the Somnia team have had some unique insights as it relates to how you build and launch a metaverse that is unique and new and novel, and also some part of the story of the success thus far?
So I think there has been technology challenges, and I think the blockchain was one of those. But I think the other thing is innovative, interesting experiences on top. I think I don't want to talk badly of other products, but the failing has been the content on top in these metaverse experiences has not been compelling for consumers. And ultimately, you're vying for consumers' attention, and they have to have an experience that's interesting for them. They want to attend and want to be a part of. And so I think actually the biggest challenge has been the content creation side and cracking that rather than necessarily core infrastructure. But that is a tooling problem, and that does have a technology piece. Like a previous technology that we built at Improbable. So this is a technology we built, which is why we built the blockchain. So this is an event we did with Major League Baseball. This is around 7,600 baseball fans all attending a digital baseball match together. So they can all see each other. They can all have fully customized avatars. That's a very difficult challenge to overcome. They also have voice communications. These larger characters are telling the people where to go, what to do. Then they kind of have different events and experiences they do here, like mini games and things like that. They then all run into the experience, and then they go and watch a baseball match. So the really cool thing about this baseball match is it's a digital twin of the live baseball match. So we stream data from the baseball stadium into the cloud, turn that into 3D models in real time, and you get a one-to-one replica between the physical and the digital. So you as a consumer can go to the event and feel like you're there. So here you can see the side-by-side where it's all synchronized together. So basically, as a consumer, you can go to this experience, feel like you're in a baseball stadium in a massive crowd, but ultimately you can be at home on your couch, on your way to work. All you need is an internet-connected device to be a part of this. So this experience is, in my opinion, very differentiated and very compelling. I think that's been the major challenge to actually have that innovation experiences, which has required tooling up the chain as well as the core blockchain itself. Because once you then have these experiences which can track the consumers, you need a blockchain that can handle tens of thousands, hundreds of thousands, millions of TPS, basically, because you get a lot of people all trying to transact at the same time. You need a very fast blockchain to solve that problem. Otherwise, the consumer experiences get degraded and it's not good at the end of the day. So that's my view. I think it's also a time thing. Web3 in general has incredibly short time horizons and cycles and expects things to happen like instantaneously. Things like this concept of the metaverse, video games, these things take time because you have to build up the content, the tooling, the user base. They're not instantaneous overnight hits. And so the other thing, I think Web3 doesn't really have the attention span for this kind of content as well. That's the other issue.
You're obviously a big fan of open standards, and you talked a little bit about, where you see the vision longer term, especially on the infrastructure side. But when you think about, Somnia specifically, how do you see governance and setting evolving, both in theory and in practice, as Somnia continues to evolve?
Oh, interesting question. I think my honest answer is I don't know the answer to this yet. But the vision for us is to progressively decentralize the governance of the system. And the way we think about it is thinking about the different counterparties in the system, what role they play, and how they should govern that piece. So, for instance, the validators, they need a very strong say in the technology roadmap when things get chosen to roll out, potentially some of the economics of the system. So they'll play a role in the governance of that. The end users will have a role in terms of allocation of funds to new content, those kind of elements. The developers will talk about the technology roadmap. So the way we think about it is kind of thinking about the different groups of people, what their kind of skin in the game is and what they care about in the ecosystem, and allowing them to participate in that part of the system and govern that part of the system. This is different to a lot of projects where they go for a DAO style model where one token equals one vote. I do think token holders should hold part of the governance, but one token, one vote, I think creates two problems. One, you get this odd plutocracy where the people with the most money have the control of the system rather than the people who are actually in the system, which I don't necessarily like. The other thing you get a lot of is apathy, where most of the population of token holders just don't vote and things get kind of voted in or controlled without necessarily a lot of people really contributing. So this is why our formation of governance is going to be much more around the different groups and them kind of governing the parts that they care about in the system, rather than just if you have a token, you can vote, and that's how the system works. But it will be a evolution. Like we will take this step by step. And this is why I don't really have a full answer today. I think the first elements of decentralization in terms of the governance we'll be doing is with the validators themselves, and then the user base allocating incentives across the ecosystem. And then we'll slowly kind of step by step this and increment it over time, rather than going, I think I've seen a lot of projects go from zero to DAO instantaneously. And then you get the issue of no one can make decisions, everything takes too long, and we're not at that phase yet. But it is important, I think, to have all these counterparties being part of the governance system, because that's important to decentralization, important to making sure this isn't all on one singular counterparty at the end of the day.
And Paul, when you think about traction and what that means to you relative to Somnia, how would you define that? And then sort of second part of the question, where are you seeing the first elements of that in sort of the early days post mainnet?
Yeah, very interesting question, because my mind has changed on this in the last few weeks. So the original position, so Somnia, as I said, very focused on the gaming and entertainment angles. And so the original kind of traction metrics that we look at and the key KPIs are user counts, so daily active wallets, monthly active wallets, and then transactions, because transactions basically shows the usage of those users of the different applications in the chain. And ultimately, the revenue model of the chain today is gas. So whenever you use the chain, you pay for a transaction with gas. That's the revenue model of the chain. So if you were to ask me a few weeks back, that would be my answer. I think now the way I'm currently seeing things change in the Web3 space, and I think this will continue, is that there's this, people call it the revenue meta, where it's now very important for a system to actually have high revenues, and then people are looking at valuing projects based on those revenues, more like traditional finance, which I think makes a lot more sense. I've always sat in the space and been like, these valuations are crazy. If you look at traditional like PE multiples of most projects, it's like, what? It makes no sense at all. Even though obviously people are speculating that in the future this will become much bigger, they're still way out of whack in my view. But I think this will start to shift over time as traditional finance gets more and more involved in the space, and you'll slowly see a re-rating of projects based on the fundamental revenue models of the systems. And so now what we're thinking about at Somnia is taking those kind of core DeFi primitives that all of these applications on top use, making them almost part of the protocol, and the revenues of those systems accruing back to Somnia itself. So I think what we will end up doing is kind of using those revenues to accrue value back. And so another success metric will be, what is the revenues of all of those key DeFi protocols that all of these applications sit on top of? And that will be, I think, give Somnia a more real valuation, like with traditional financial metrics. So that would be my new one now. We have very clear targets internally for like user base and transaction counts, because that's how we've always thought. And now we're starting to add this concept of revenues from these key DeFi components as well.
Got it. And you spoke about this earlier with, focus on gaming and a handful of other places, but then also now this new sort of vector that may be unexpected on prediction markets. And so I'm curious, as it relates to like maybe breaking this into sort of retail and enterprise for a second here, when you think about that sort of delineation, how do you think about the enterprise side and how do you think about the retail side as it relates to Somnia? And are those different for now, or will they evolve later?
Interesting. So ultimately, both of these parties sit on the same substrate, which is Somnia as a piece of infrastructure. And then the next step for us, and this is very early, by the way. In fact, I think you're the second podcast I've mentioned this on. What we are building towards next is kind of a club that's enshrined in the chain itself. So there's a central limit order book, which everything sits on top of. Because at the end of the day, these entertainment experiences, people are trading items, prediction markets, and that kind of enterprise, those kind of larger enterprise models, it's all clubs at the end of the day. That's like the fundamental building block that we've come to realize. And so what the next piece of technology, the next iteration you'll see in the next quarter is kind of a enshrined club that sits across all these apps. So when the retail consumers are coming in to like a video game, like an entertainment experience, they're buying and selling items that will be transacted through that club at the end of the day. Or when a big kind of financial institution is using, I don't know, a future prediction market for a reinsurance product or an insurance product, that will sit on top of this club at the end of the day. So that's the way I kind of see it, where the infrastructure binds these parties together, but they have very different front doors at the end of the day. I don't know, maybe. Actually, probably the consumers will still participate in those prediction markets because people like to gamble, they like to take a punt and take a bet. But I think really they all kind of get linked together by this fundamental club that sits across everything. That is very new, though. That is literally hot off the press. So you're getting some alpha there.
Appreciate it. So looking to the future, if Somnia is wildly successful, what's the second order effect on internet or the digital economy that people aren't ready for?
Oh, that's a really interesting question. There's two things. So one is what we would have said, what I've said for the whole time, which is this idea of more people be able to create digital content and monetize that in a much more egalitarian way. So this idea of consumers creating small micro experiences with the use of AI tools, publishing those and using the blockchain as the monetization mechanism. I think that you'll see a shift from today. People can create content in terms of text, they can create videos, they can create images. The next formation of that, I think, is these digital immersive experiences, be those 3D or 2D, which are entertainment products at the end of the day. So I think that is one big change that I hope we end up enabling. And I think the reason why I think we have a better shot at that than, say, something like a Roblox does, is I think decentralization means that you get much better economics and many more people can access this, rather than the economics in a lot of these centralized Web2 platforms are awful. They take like 70%, 80% take rates. It's awful. So that's one thing. I think the other thing is this idea of blockchain, this new primitive of like insurance through prediction markets. I think is a really interesting one as well, which is a new one we're starting to explore now. So I think these are like the two things that will potentially change the digital landscape fundamentally.
When you think about maybe a myopic challenge to either Metaverse or just core infrastructure related to enabling some of the vision that you just espoused, what's the one maybe obstacle, if you were able to solve for it, remove it, you think creates the best setup for success?
Oh, that's another really good question. It's got to be tooling. So the problem today is that the tooling, in order to do any of this stuff, requires incredibly high-skilled specialists, basically game developers or people who really understand how to build things within game engines like Unity and Unreal. That's a very specialist and hard-to-attain skill set. Requires years of study and learning. So really, you need to democratize that tool set. And so I think AI has a good shot at doing that. And we're investing heavily in this kind of AI generative content angle to help more people be able to build this content, so that many more people build the content. That means you get more content. That means you find more fun content and you bring consumers at the end of the day. So I think there's that side. I think there has been a fundamental issue on the blockchain infrastructure side. If you ever had any of these experiences that scaled up to a lot of users, existing blockchains would not scale sufficiently and you'd have massive problems. This is why today you see everyone building an L2 basically. Whenever they get to a certain scale as an application, they have to move into their own chain because they can't scale with the shared infrastructure. We want to make sure that doesn't happen, so that the shared infrastructure is sufficiently performant so everyone can plug into it. Because I think then you get what we call composability of the applications. So an example of this in video games, for instance, but we've seen it in DeFi, right? You've seen it before in DeFi, but I think you can apply this to every industry if you had enough performance on chain. So in gaming, for instance, if I build a leaderboard system that works really, really well, I can put that on chain as a protocol, then someone else can use that same leaderboard system. Or I make a loot box system, put that on chain, someone else can use that loot box system. So because of this, you have these well-defined components which then other people can pull very quickly. That makes it much easier and quicker to build these video games. Therefore, you get more games being released, and therefore you find more fun video games. I think if you look at the traditional games industry, most of the major genres over the past 20 years have been all modifications of existing games. So a MOBA was a modification of Warcraft 3. Survival shooters were a modification of Armor. So they're all mods of existing games because these mod platforms enable more people to create in a much easier way, and therefore more content gets created, and therefore you find these new things. And I think blockchain has a shout to enable that at a mass scale of like UGC with lots of these components that plug all together. So I think there are two things. One is the tooling. One is having a blockchain that's sufficiently performant that you can have this composability. And I still think there's more to this as well in terms of that composability. I think you can start to apply to lots of different industries. We're just very focused on the entertainment one right now.
Got it. And maybe going back to more of a personal and a leadership, sort of reflection. I always imagine that most folks see like Mainnet launch, and that in their mind they get this vision of mission control for the Apollo missions, where there's this big room and everybody's like watching different dials and so forth. But I'm curious what actually keeps you up at night as the CEO and founder, as it relates to post Mainnet launch. Is there any like one thing that you lose sleep over, or that you're constantly thinking about?
Oh, that's actually quite a weird one. There's loads of different things. I think for me, the thing that I always think about is we've created this new technology that enables these new capabilities. So this super high performance EVM compatible blockchain. There are a lot of new applications that I don't even think we know are currently possible because of the blockchain technology that we built. And so for me, it is always thinking about, so we have this strong thesis around gaming and entertainment. We found this new one now in kind of prediction markets, but I think there are probably a load more. There's the thing that keeps me up is how do we enable kind of a broad set of developers to be aware of this technology, use it in a much easier fashion, and then create these new applications that have never before been seen. So one of the things we're doing in the next month in October, we're adding this thing we've called Somnia Streams, or we should call it Somnia Chain Stream. It basically turns the Somnia blockchain into a similar API to like Firebase or Superbase, if you've ever used that in the Web 2 world. So basically a global pub sub where you can listen to data, subscribe to data, and then publish the data to chain in a very easy manner. The reason we built that is basically it means that Web 2 developers can now start onboarding and using blockchain tech much easier because they have familiar APIs that they're used to in the Web 2 world, but it's backed by a blockchain at the end of the day. And so that's, I think, the thing that keeps me up most at night is thinking about the different avenues and the different technology components we can add to broaden out the developer set that can explore this new space with us and find these new applications that were never before possible. Stress about that a lot. And also, this also comes down to go-to-market things, right? It's like, where do you need presence? How do you make sure developer relations is in all the right places, turning up to relevant events, making sure you're kind of pulling in all the developers from all the places you can. I think that keeps me up most of the night at the moment.
What's your sense today of the net flow of Web 2 to Web 3 developers? Meaning, I think at any given point in time, Web 3 is, acquiring, so to speak, Web 2 devs and users. How do you think about that dynamic, and where do you see it right now in sort of the current market?
Yeah, so I will touch on this with the gaming industry in particular, because I'm very connected to that. And then I'll talk about it slightly broader. So in the gaming industry, there is currently gaming is a challenged industry because fundraising is very hard in the games industry at the moment for Web3 and Web2. And what you're seeing at the moment is a deconsolidation phase from the big AAA publishers. These big guys like EA, Activision, Blizzard. Lots of the talent is kind of leaving that or being fired from there because of challenging revenue times. And then what I'm seeing is these are people are forming new studios. We call them breakaway studios, and there's lots of these new studios being formed. Now, there's a natural skepticism from game developers about Web3, primarily because in 2021 cycle, so many scams, so much bad stuff that a lot of them got very turned off from it. But if you can catch them and find them and evangelize them and preach them about there's new revenue opportunities, there's new models, there's new ways you can attract and retain players, once you give them the realization that actually Web3 gives them new mechanisms, they are much more interested and much more inclined. So I'm seeing a lot of new breakaway studios coming into the space. I think this is also massively helped from the regulation perspective because regs are getting much cleaner and clearer. Devs are willing to take that risk. So at a broader set, I'm also seeing more developers come into the space from Web 2 to Web 3 because I think now they had ideas, they had beliefs, but they didn't want to do it because they were like, I might get the SEC might come after me or might get put in jail for some reason. But now because regulation is getting much clearer and cleaner, I'm seeing a lot of new developers come in who are super smart. There is a competition though with AI. I think if I look at startup founders, the big choice they have to almost get pushed into AI because there's so much VC capital there right now, which I always find a bit sad because I'm like, you could do something really cool in Web3, but because the VC capital is there, there's still, I would say, the net inflow is to AI, but there is a lot more coming into Web3 and crypto because of the reduced regulation. And then you're also seeing big traditional companies come in now as well. Like you've got your Stripes, you've got your Googles. They're starting to come into play now, again, because of regulatory clarity, I think. So I'm very bullish on the developer ecosystem space. I think it's growing at quite a good clip compared to bear markets, compared to previous cycles, because regulation's much, much cleaner now.
You touch on something that's really powerful insofar as I don't think there's an appreciation for how different categories of technology, bid for talent. So as an example, I was at SF Tech Week this week. And when I looked at sort of the broad base of different events, discussions, panels, and you break it down by, let's call it technological category, it's unbelievable how big AI is relative to everything else. And it's, I think, not only a signal of how much capital has gone into that market, but also how much talent has moved into that market. And I would say that, when you think about those different components, it's just really interesting to see how the net flow starts to change based on what's happening, both from an industry perspective in terms of enablers, but also clarity in terms of regulatory clarity and so forth. And that's relevant not only for the Web3 space, but it's also relevant, frankly, for the AI space as well.
Yeah, I think the thing that I see a lot, which I worry about, is the number of AI cross crypto projects. I get a lot of these across my desk every week, and I haven't found many that are like, that is a legitimate use case that makes sense for blockchain technology. There's a lot of stuff there because they know AI is very hyped right now, and there's a very good fundraising market, but they want to do something in the Web3 space. They kind of cross these over. I'm like, this product makes no sense at all. What's going on here? So I do worry about that a bit as well. That's quite.
Yeah, we talk a lot about this in the form of there's a lot of bolt-on AI that is, I think, prevalent in a lot of technology companies. I think Web3 is one of many. I think I've seen personally, AI being applied and bolted onto a lot of other types of technological, sort of solutions and software. But I think ultimately there's very much a last mile problem in a lot of industries that AI is particularly good at solving. If you have a team that understands how to solve that last mile problem using AI, right? AI at the end of the day is just a technology, it's a tool. But ultimately, while we are in the technology space, we're also in the solution space ultimately, because that's what we sell, right, to customers. So I tend to agree that there's a trend towards this in terms of bolt-on AI. But I do think I'm a bit more optimistic that we will see some really interesting last mile AI applications within both Web3, but also within a bunch of other categories as well. So Paul, the question we ask all of our guests is for their high stakes hot take, which is their boldest prediction for the next 12 months for our space. And so I'm curious what your hot take would be for the next 12 months, taking us into sort of the back half of 26.
I don't know if this is a hot take, but I think people are severely underestimating the impact of the Web 2 big companies coming into the space and changing it fundamentally. I think people don't understand the distribution power a company like Stripe has and their connection to small, medium businesses and how likely they are to win in the categories they will compete in compared to any other incumbent in the existing Web3 ecosystem. And so I think that is severely underestimated and people should be watching them very carefully and really considering, do I want to compete with these big players that already have massive inbuilt distribution? Do I want to go to other areas where they're not going to, we're not going to have a competitive set? That's my big hot take, which I think people underestimate in the space because they're so kind of enveloped into crypto Twitter, and they live in that world basically. And when you zoom out a bit more, you're like, whoa, there's this big Web2 companies coming in that are going to change the space quite significantly.
No, absolutely. Absolutely. I think distribution is probably the most underestimated thing that happens in tech and with founders, everything. I think it's very much underestimated how much that impacts the outcome. Well, with that, Paul, let's park it there. Paul Thomas, CEO and founder of Somnia. Thank you for coming on High Stakes. We look forward to having you back sometime soon.
Yeah, it's been great fun. Good chat. See you later, guys.
Cheers. That's a wrap on High Stakes, the podcast where Web3 meets the real world. For more insight into how blockchain and AI are reshaping institutions, head to validationcloud.io and follow @validationcloud across all socials. Stay tuned for more conversations from the front lines of innovation. I'm Alex Nwaka. See you next time.